foremost, thanks everyone for joining us once again. In about 9 minutes, we will have a look at the Eurozone CPI month-on-month data release. And what we should mention is that Eurozone consumer prices plunged 1.1% in January, pulled down by a fall in non-energy industrial products, registering the fastest monthly drop ever recorded. Annual inflation remained at 0.8%, far below the European Central Bank's target. Economists forecasted a price rise of 0.9% in January. Greece and Cyprus remain stuck in deflation, and only 3 countries in the bloc, Estonia, Latvia, and Slovakia, saw a price increase in January. The IMF worries that low inflation is stalking the Eurozone. Now, while not as threatening as outright deflation, the organization explained ultra-low inflation, let us call it low inflation, can be problematic for the euro area as a whole and for financially stressed countries, where it implies higher real debt stocks and real interest rates, less relative price adjustment, and greater employment. Let's have a look at what some of the economists are forecasting with regards to today's release. Here we have some of the economists that were polled by Bloomberg, and you can see that the median estimate is 0.4%, and overall that is the highest, while lowest being 0.3%. Although the European Central Bank still officially insists that inflation risk isn't a real and present danger, some bank officials are hinting that the ECB is open to the possibility of launching a program of asset purchases and or other strategies for a new round of monetary stimulus. Now, one of the new executives of the ECB that joined the executive board earlier this year told the Wall Street Journal last week that we have room left to act. The deposit rate could be negative, for example. And finally, what we can also have a look is what are some of the Dukascopy traders and community members saying about the potential impacts on the Euro-USD based on the upcoming data release. Now, we can see that 39 people who voted and participated in the poll, or 56% of respondents believe that the impacts will be bullish, while the remaining 43 believe it will be bearish. If we also consider some of the comments that they provide in order to support their view, for example, Peter44 says, if we consider latest druggy concerns about current euro price and reading will be lower than expected, we can observe here quite a nice down move. Now, this supports his bearish view. With regards to the bullish view, we can see Lolor says expecting positive numbers that will cool down deflation risk, especially a bullish reaction. Now, these are some of the fundamentals that we wanted to share with you today. And moving forward, I am going to give the word to Alex, who will have a look at the technical aspects and consider both positive and negative impacts with regards to the upcoming data release. So, Alex, feel free to join us on the whiteboard.
Thank you, Gita. Hello, everyone. So, once again, today we are discussing the potential impact of the Eurozone inflation data on the single currency. And even though the market sentiment stands for the improvement over the observed period, still data has a potential to surprise markets to the downside, and therefore I will discuss both positive and negative surprise trading strategy. Well, first of all, as always, let's start with the market sentiment. And as you see that more than 69% of all Dukascopy traders are selling the euro versus the greenback at the moment. And moreover, you see that in more than 64% of all cases across the board, the single currency is sold, while attitude towards the greenback is slightly strongly bullish, with American currency being bought in 65% of the time. And when being compared to Friday's figures, if I recall correctly, the euro was sold in 61% of the time, while greenback was bought in 62% of all cases. Hence, we suggest that traders are more bearish on the pair now than it was on Friday. When having a look at pending orders, we see that both in a 50 and 100 pips range, pending orders are placed to sell the pair. And according to market sentiment provided by other market participants, the pair is also expected to depreciate, as traders are quite universal, with more than 76% of traders at one, the Saxo Bank and Daily FX, holding short positions on the pair. Meanwhile, speaking about technical indicators, we see that indicators only at 30-minute charts are sending sell signal, while vast majority of them are neutral. However, I would like to point out that MACD indicator, which suggests market is overbought or oversold, is pointing at pair's depreciation as well, considering the most traded currency pair as overbought already. And so let's now turn to the strategy itself. And when speaking about positive surprise trading strategy, we see that the entry point is always at the market price. Regarding the take profit, we suggest placing it around 139.10, and that will be a recent high and daily pivot. And pips, that will be just 12 pips from the market price. And when speaking about the stop loss, we suggest placing it around recent low and 200-minute simple moving average, just 3 pips from the market price, so not a very risky trading strategy. And yeah, here you can see a quotation from one of the Saxo Bank strategists, Commerce Bank, and he considers that the data will be revised to the downside to 0.7%, and therefore there's a great, rather high possibility that markets will move downside after the release of the data, and therefore you can see a negative surprise trading strategy on the 1-minute chart, obviously. And yeah, actually this trading strategy is a little bit more risky. However, the potential profit from it can be much significant, as even a slight deterioration of the data will provide a massive sell-off of the single currency. So the negative surprise trading strategy includes the potential stop loss around 139.03, around daily pivot and 4-hour support, just 5 pips from the market price. And when speaking about take profit, we suggest placing it around 2 days low, and that will be actually almost 20 pips from the market price. So once again, we expect data to the downside much more impressive rather than to the upside. Yeah, thank you, Dr. Dow. Always a pleasure to hear something from you. And yeah, so 2 minutes before the news release, and I guess we still have some time to show you daily charts. And here you see that on the daily chart, the pair has been trading in boundaries of the rising wedge pattern since July, suggesting that the uptrend move is rather strong. And actually, since then, the pair has performed 1,200 pips per rally, so quite an impressive move. And however, you see that currently the pair is stuck right at the pattern's resistance. So yeah, the data is already out. So we see that monthly inflation came at 0.3%, slightly lower than expected. Actually, annual inflation also surprised markets to the downside. And core inflation came in line with market's forecast. However, the market traction is quite modest, as the most traded currency pair depreciated only 6 pips. Yeah, and actually the reaction can be explained by the fact that during the last couple of 20 minutes, yeah, the pair has fallen more than 70 pips, so perhaps markets have already priced in the potential impact of the inflation data. However, once again, as we assume that data surprise markets to the downside, the pair still expected to depreciate and most likely to reach the potential take profits around 138.79, which is once again today's low. And also keeping in mind that later this week we're having FOMC meeting, where Janet Yellen will most likely shed some light on further moves of the monetary policy. The greenback is expected to appreciate, and therefore the most traded currency pair can easily fall to weekly support and a recent low on the 4-hour chart. and the target level for the pair will be located at 138.39, just 50 pips lower from the market price. So with the rather high confidence level, we can suggest that the level will be breached later this week when being based on the fundamental data. Yeah, but the pair is still depreciating, as we suggested, and since the release of the data, the pair has fallen almost 9 pips. So once again, not a really impressive move. But nevertheless, the outlook for the pair is bearish when being based on the market sentiment, technical indicators, as well as fundamental data. Yep, I guess that will be pretty much from my side, and I'm giving the floor back to you, Rita.
Thank you very, very much, Alex. Nicely done, nice technical analysis. It seems to be the end of today's economic data release. The data, even though did not fully meet the expectation, was still in line with some of the estimates provided by the economists polled by Bloomberg. And that is all for today. Now be sure to join us in about 2 hours at 12 GMT as we will have Mark Spiles, Dukascopy Vice President and Chief Operational Officer, joining us live in order to discuss the potential for Fed to seek for a broader data range in order to determine their stimulus and QE. So be sure to tune in. Very much we appreciate that you were able to join us today, and see you soon. Take care. Bye-bye.